it has finally happened. The US Federal Reserve has cut interest rates. Of course, this has been a huge political issue as well as an economic one in the US because Donald Trump has been demanding that rates come down. Our correspondent Ben Knight joins us now from Washington. Ben, this is not unexpected, but it is still a really significant moment, isn't it? Not just for the United States, but also the global economy as well.
Yeah, absolutely. So, as you say, it was very much expected, and it's 0.25% rate cut, 25 basis points in the finance lingo. So it's certainly not as much as Donald Trump was wanting. As you say, Donald Trump has been piling pressure on the Federal Reserve Board, and particularly its chair Jerome Powell, for weeks, if not longer, because he thinks that, in fact, he's got the nickname for Jerome Powell. Too late is the nickname for the Federal Reserve Chair, because he says he's too late with the interest rate cuts, and definitely wanted something bigger than this to spike, particularly the housing market, but also business investment, and to lower the cost of borrowing for the federal government. So that didn't happen, and that's also despite what people are calling essentially political interference by Donald Trump. This was the first meeting of the Federal Reserve, which included his own nominee. Stephen Miran is the name of the man who just voted at his first meeting. In fact, he was the only member of the board who didn't vote for that 25 basis point cut. He voted for a 50 basis point cut, but the majority ruled, and so that's where we are. But look, it's also interesting to hear what Jerome Powell had to say afterwards, because, as you say, this is the first interest rate cut in the United States for 2025. And not just that, the Fed's pointed that there could be two more, or there would be two more 25-point cuts between now and the end of the year, and further cuts next year. So what's happening? Well, what Jerome Powell said is that there's a shift going on in the Fed's focus. Obviously, it has a twin focus, and that is it's unemployment and it's inflation. To date, the focus has been largely on inflation, which they say is ticking up. What Jerome Powell said is that the effect of tariffs is starting to be felt. Now, the question is, are the tariffs that are being charged on imports causing inflation? Is that going to be a one-off, or is it going to keep going? He says we don't know about that yet, but it's one to watch. But what he also said is the shift or a rebalancing back towards employment. Unemployment is about 4.3%, but he said it's a balance, but it's what he called a curious balance, and that is that there is low supply for workers into the labour market. So there's a shortage of workers, and he very clearly said that's got to do with lower immigration into the United States, which, as we know, has been having a massive crackdown on immigration into the United States. So there's a shortage of workers, but at the same time, there's also lower hiring, what he called a low hiring, low firing environment. So a shortage of workers, and businesses aren't actually employing that anyway. So anyway, that's the logic, that's the argument that was laid out. But let's hear Jerome Powell give his description of where the economy is and what their decision making is going to be from here.
In the labour market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of this slowing likely reflects a decline in the growth of the labour force due to lower immigration and lower labour force participation. Even so, labour demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant.